What's up? It's episode 107, Payne Points of Wealth. And surprisingly, economic data continues to come in relatively strong. Meanwhile, inflation is starting to plummet, whether it's oil prices, lumber cost, supply chains easing. We're starting to see some relief within the economy. Is this a good thing? Is this a bad thing? Or is this just a fake out as Wall Street continues to tell us the economy is about to fall off a cliff? We're going to give you our thoughts on that today. And we're going to talk about your ego and why it's ruining your financial independence plan. Check it out. We've got a great show.
You know, Chris, I always like to start off a show where we're talking about your ego, not Ryan's ego. How is that?
Well, you know what, Dad? I'm actually surprised that all three of us are able to fit onto the screen, considering how big Ryan's ego is. But, I digress.
You know, guys, when I built that house in Gwinnett, I had to make the door a little wider just so Ryan could get his head through the door. But don't digress. Let's get focused on what's going on here, right? You're right, Ryan. Oil's coming down. Housing prices are dropping. Mortgage rates are coming down because the 10-year Treasury traded under 3.5% this week, right? And I just can't believe the pundits keep telling us over and over and over again that, things are really bad. I mean, wasn't it Goldman Sachs that's now predicting that the S&P may hit 3,600 next year? By the way, we're at 4,000 today. Aren't they the same folks that told us we'd be at $120 a barrel oil right now?
Yeah, it's just been a drumbeat, especially this past week. It seems like we had this huge rally in the markets. I mean, markets have literally turned on a dime. The Dow Jones did 20% over 2 months, which is just a crazy return. And you would think that would create some bullishness. People start getting more optimistic, but that's not what we're seeing. We're seeing all the bankers. They're telling you that, oh man, I'm really wary about this market. It's probably going to go down here at some point in the near future. Everyone just keeps saying it's a foregone conclusion that we're going to have a recession. And you know what? I'm going to argue for a minute here because one of the big, I guess, ideas on Wall Street right now is good news is bad news. Good news is always good news. I don't care what anybody says. People having jobs is good news. The ISM service numbers were really good. We're a service economy. So, it's just, to me, it's crazy that we can spin this where we're seeing great economic data and all of a sudden, that's not a good signal. That's a bad signal. How? I think that good news is bad news and bad news is good news is accurate, right? If you look at all the headlines that are coming out now, it's all but certain that we're going into a recession in 2023. I was talking to a client of mine last week. He was telling me about a friend of his who is a quote unquote market expert, knows for a fact that by Q2 next year, we are 100% going into a recession. So it's kind of like when the bad news is coming out, that's the time to really step on the gas pedal.
Well, the thing is, you know what, guys, recessions can be rolling. It can be a hard landing. It can be a soft landing. But, based on the economic data, Ryan, that you just spoke about, we're going to have no landing, right? It looks like it's rolling right along. But, what's interesting is that the banks, which make their money by lending, since they seem like they're trying to make it up on the backs of their depositors right now. I can't tell you how many clients I've spoken to in the last month about their money market fund at some of the major banks, like 1% or, 1/10 of 1%. The short-term treasury yields are almost 4%. So the banks are making a huge profit on your cash right now. So if you have a big hoard of cash somewhere, give the bank a call because they're looking at you like you're fat, dumb, and happy, and they're making a nice profit off of your cash balance.
Wait, Dad, hang on a second. Last year they were getting less than 1% in their money markets. Now they're getting 1%. The bank gets 2%. Everybody wins.
I know, Chris. You called me the other day and said, "Why don't we start a bank? The profit margins are huge."
Well, yeah, I think that's the two lessons here. Number one, if you're sitting in a bank account right now earning nothing, move your money. Number two, I want to own those bank stocks because if you're the bank, you're making these profit margins are tremendous right now. Never mind, you're probably getting a 3-4% dividend on banking stocks right now, and those dividends increase over time. So it's like, be the owner, not the consumer, and move your money as quick as possible. You know what, Ryan? I think Bob's Bank's got a nice ring to it.
The Bank of Bob is more like it, Chris. And every time I turn around, there's somebody in our family hitting the Bank of Bob, but I digress. But you know what? I'm going to console all my clients who are getting no return on their corporate cash accounts in their bank accounts, just so the bank can make profits so Ryan's bank stock can go up. I'll just let them know that. It's like, yeah, Ryan wants his bank stocks to go up. So, yeah, too bad, they're nickel and diming on fees. And that's really what's going on right now.
I think I should point out that the analogy for or the three-letter acronym for Bank of Bob is Bob.
Wow, Chris.
Oh, my God. Hey, Chris, you're in charge of marketing from now on. As well as the market's recovered so far this year, because I think of this negative drumbeat from the financial news and just the regular channels, investor sentiment is still really negative. People just don't feel comfortable. Now, look, I'm in Naples. I run into a lot of retired folks, and I've been hearing this for the last 20 years that I've been down here. Bob, how is it possible that the market can go up when things are so bad? They always think things are so bad. And, unfortunately, a lot of investors feel that way right now. They're missing out on some really terrific opportunities.
Well, they are. And again, you just see these big moves when they happen. They come unexpectedly. We've talked about that a lot. And it's kind of like you have all these bull markets happening kind of hidden in plain sight. Like, I didn't even realize that if you look at the FTSE 100, that's the UK stock market, there's been no good news out of England all year, right? Their government's messed up. They've got hyperinflation. They've got more problems than we have over here. They've got an energy crisis, yet their stock market is actually flat for the year. And even Germany probably has the worst news, right? They're getting hit the hardest from this energy crisis. Their stock market's doing better than ours. It's only down like 9% this year in local currency terms. And meanwhile, Latin America is hot. It's up 14% for the year. So, I think the bottom line is we get so focused on the U.S. market, and not just the U.S. market, the S&P 500, which is about 40% in communication services. That's technology. And just straight ahead technology stocks and consumer discretionary, which is like big names like Amazon. So it's really, really skewed. They've been the worst places to be. And if you start looking outside of big tech, out of disruptive technology, all the names that we've talked about over and over again being overvalued, you have a lot of markets right now that are not only recovering, but are going positive for the year. And this is why it's so critical to diversify, because the world's probably not as bad shape as you've been hearing, within the media right now.
Well, everything's cyclical, guys. So, everything reverts to the mean, as I've said many, many times in the past. And, Latin America is hot right now because we've had a global commodity boom, and they're a commodity-based economy. Meanwhile, China keeps threatening to come out of COVID restrictions. And there's a market that the pundits have been telling me, on CNBC and Fox Business, that, China's markets are uninvestable. Meanwhile, the market just rallied 25% in the last 2 months. So there's a reason why a lot of these pundits underperform, or why they work forever, because they never make any money because they're never invested.
You know what I love? I love when people say that certain markets are uninvestable. It's like you're not using an iPhone. You're not using any household good that comes from China. I mean, it's unbelievable.
Yeah, every major company in the U.S. is doing business in China. Yet it's uninvestable, right? Ask Apple if China's uninvestable, given the fact that that's where they invested all their money into producing iPhones. So it's like right in plain sight. Yet you hear these headlines, they sound so smart, but meanwhile, it's the second largest economy in the world. It's clearly bottomed here, and China basically drives everything. When China demand goes up again, that's good for everybody, and it's just about to happen. We're on the verge of that, yet we want to sit here and twiddle our thumbs and say it's so bad that unemployment's so low. Interest rates are going to stay a little bit higher for a little bit longer. It's nonsense.
Well, you know what it is, guys. We have a world stock market capitalization that's dominated by the U.S. Now, it's not 100% of the world stock market capitalization. It's close to 55. Sometimes, and any time during the year, it could be as much as 60%. But you're talking about more than half of all the companies publicly traded are outside of the U.S. And, we tend to have this home bias, right? We always want to bet on the good old US of A. But Chris, you just had a client from Malaysia. And where did they have all their money? Was it all U.S.?
They didn't have a single penny in the U.S. It was all in the emerging markets.
Yeah, it's amazing, right? So it's like, well, why you invested all Malaysian companies? Well, because Malaysia's safe. That U.S. is a real risky place. I mean, you didn't see all the bad news over there? I mean, and that's kind of how we feel, right? I don't want to invest in China. It's risky. I don't want to invest in Europe. Oh, they're having hard times. I don't want to be in Latin America, for crying out loud, right? But that's where the opportunities are in all markets, right? All markets revert to the mean. All markets are cyclical. It's always about buying low, guys. And if you just red line the entire world stock market capitalization, you never get a chance to buy low because you've already eliminated that from your thought process.
Hey, hope you're enjoying episode 107, Payne Points of Wealth. Everything you hear on this podcast, along with some due diligence of your own, can help you get ahead financially, literally at any stage of your journey. But if you want a more hands-on approach and you've saved over $1 million for your financial independence plan, Bob, Chris, and I will run for you our total financial master plan, and we'll do that with no obligation or cost. There's no other firm out there that will do this kind of work up front. We do a holistic, full financial plan. In fact, we build you your own personalized financial portal to give you a bird's eye view of your entire financial life, and we just hone in on every issue you need to address today. We look at an income plan. If you're getting close to retirement or retired now, how do you draw from your portfolios? How do you optimize for inflation? We look at a savings and a expense plan. How much should you be saving every year? How do you optimize that for taxes? Money saved in taxes is just as green as any money you can make invested. It's not what you make, it's what you take. We give you our full tax playbook, and we look at diversification. We look at everything you're invested in. We look at all those hidden costs on those annuities, mutual funds, insurance products. Show you how to reduce that cost, properly diversify your portfolio to give you the best odds of success so you don't run out of money over the rest of your life. Simply go to www.paynecm.com/financial plan. If you saved over $1 million for your financial independence retirement plan, go to www.paynecm.com/financial plan to see if you qualify for a free financial review. All right, it's a tipping point. This is where we pinpoint the pain point, of course, Payne, having the biggest impact on your wealth right now. And Bob and Chris, actually Bob and I were talking about this recently. And at our boutique firm, Payne Capital Management, we pretty much focus on financial planning. And we look at so many different portfolios a month, something like 50 different portfolios a month. We see every single strategy out there. We know what every investor's thinking. We know how they screw up. And I would say that one of the biggest mistakes investors make when you're trying to plan for your financial independence is you let your ego get in the way. And nothing makes for a worse financial plan than letting your ego dictate a lot of your financial decisions.
No, it's so true, guys. I mean, we've done, so many different seminars about the historical rates of return of the markets. We've done so much due diligence, read so much academic research that shows that no one can beat the market. No one. Right? It's, maybe you get lucky and you outperform for a year, but it doesn't continue. So there's never been a company, an individual that's been able to consistently outperform the market. But what do people do? They got to try and prove that because my ego says I can do it, I'm going to go out there and underperform, even lose money trying. And I'm telling you, please, I'm disabusing of that notion right now. No one can beat the market.
Well, investing with your ego is kind of like when you're driving and you don't look at your rearview mirror, your blind spots when you're changing lanes. And I'll give you a really good example of this. I was meeting with a client a few months back down in Florida, and he was just going through the entire portfolio and telling me how he doesn't want to invest in anything international. And when I asked him why, he said it's because it doesn't do me any good. Like, there's nothing good overseas. So I made him get up. We walked out to his driveway, and I pointed to his car. I said, "What kind of car do you have?" He said, "It's a Kia." I said, "Where do they make a Kia?" He said, "Korea." I said, "Is your Kia not a good car?" He's like, "Well, it is." I said, "Well, that's international markets."
Yeah, I mean, it's
it's
like,
pretty amazing.
You'd be astounded if you saw almost every Fortune 500 company actually manufactures in China. We're not allowed to talk about it, but it's true. It's like it's an uncomfortable truth. And I always say that too when someone says like, "Oh, I would never invest in China." It's not patriotic. Then I'm saying, then get rid of your iPhone tomorrow, right? Because that's made in China. So if you're really that patriotic, get rid of that phone. And I don't think America makes a phone. If they did, it's probably a really lousy phone, let's be honest.
Well, I can tell you it has a rotary dial, if anybody
Right.
remembers that.
Rotary dial, got a huge antenna. It looks like Bob's car phone from the 80s. But, the other thing is interesting too. I was at this charity event the other night, as one does here in New York. And I was sitting next to a guy. And of course, he's telling me, as soon as you're a wealth advisor, everyone has to tell you about how smart they are and how great their strategy is, and you have to shut up. And he says to me, he's like, "I got out of the market in January." Of course, at the high of the market. And I said to him, "Why did you do that?" And I gave him kind of a weird look. He goes, "Well, I don't like what's going on out there." And I said, "Well, if you're in a diversified portfolio, you're not down that much for the year. So there's no real point in being out." And I said, "Meanwhile, the economy's not that bad." He goes, "Whoa, I don't like what I see. I'm being cautious here." Yeah, and I said, once I turn the conversation around a little bit, it's kind of like it just seems ridiculous. And a lot of times I think that's what it comes down to. We would love to talk about how we're so smart and we've done something better than everybody else when it comes to investing, and it's just like it ruins your financial life because if the market continues to go up this year, we might have a positive year. You don't get those returns back. That ruins your financial independence plan because you want it to sound smart and sound like you know what you're doing, and you don't.
Well, guys, it's not just your ego. It's also, remember, the market has no ego, and the market doesn't have a political affiliation. I just saw an interesting study the other day, and let's face it, we have a nation that's focused on their political ideology, and they would ask people questions about a policy, and it would be a policy from the opposing party. And say, well, this is what your party thinks. What do you think of that idea? Oh, it's a wonderful idea. And then they would go to another group from the same party and say, this is an idea from the opposing party. That's a horrible idea, right? So it's amazing. You don't realize that you have these political, glasses on that kind of makes it fuzzy. And if you have your ego involved, that's a really dangerous combination. So just keep in mind, capital markets have no ego. Capital markets have no political affiliation.
I was talking to a client of mine a few years back when he first came on board, and he had all these individual stocks. And as I was going through each one, explaining why I wanted to sell each one, he said, well, I don't want to sell those. Those are kind of like my friends. I said, well, they're great friends when they're doing well. I said, but they don't care about you because they'll go down at the drop of a hat. So don't love your investments because they don't love you back.
And that's what you're seeing right now, right? It's like investors, Bob and I talked about this, they desperately want to recreate the past. And that's why the tech trade is so dangerous right now, because whatever the winners were the last 10 years, we just have this like innate want to keep owning those same trades because we think it's safe, and everything changes, right? I mean, Amazon was an awesome stock the last 10 years. Apple was, Facebook. But man, oh man, conditions can change drastically. And we talk about this a lot, and that can be dead money for a long time. But our recent experience, and people think 10 years is a long time in the stock market. It's not. They think, though, that's what's good because I've been doing that for 10 years. Well, the next decade can look completely different. And that's what we've seen over and over again. Like international outperformed my first decade in the business from 2000 to 2010. No one wanted to own U.S. stocks. And who knows, that trend could be happening right now again. That's why it's so critical to get your ego out of the way, be more open-minded, and realize you don't know what you don't know. And that's why you've got to own a lot of different investments in your portfolio.
It's such a great point, Rye. It's like invest in the markets you have, not the markets you want. Now, you remember back in 2008 when you were getting ready to leave Merrill Lynch and we were starting Payne Capital Management, we were telling all of our clients that, this is a buying opportunity, generational low to invest in the U.S. market. And they tell us all the reasons for the next 4 years why the U.S. was never going to be as good as it was. I mean, just think about it. 2008, 2009, most of our clients only wanted to own emerging market stocks, right? They didn't want anything to do with the U.S. market. Now we're in the same situation. Here we are in 2022, right? We're way past, that bottom in 2008. And we tell our clients, hey, you got to make sure you have money in emerging markets. You got to make sure you're invested internationally. They're going, no, Bob, you don't understand. That never does well. The only place to be is in the S&P 500. So it does go through cycles. And again, past performance is 100% predictive of past performance. Tells you nothing about what's going to happen over the next 6 to 12 months.
Well, and think about that. That's a great point, because when 08, 09 hit, we had a disastrous credit crisis in our country, and you really felt like the U.S. was done, right? We were so over-leveraged, and literally we saw the stock market go down something like 60% after doing nothing for a decade, and you just felt like the U.S. was just in shambles. And like, how were we ever going to get out of that mess? Meanwhile, we were on the precipice of one of the greatest decades ever in innovation, right? Like, that's when Facebook and Google and Apple and all these stocks went on these magnificent runs, was right when the darkest hour was right before the dawn. And now it feels that way when you talk about overseas. So it seems like when things are the worst, I mean, you couldn't come up with a good reason why the U.S. was a good place to be. We thought the economy was ruined, when the S&P was at 666 and unemployment went up astronomically. We forget those things today, right? We forget just how dire it was. And meanwhile, that was a generational buy, to your point, Bob. It was one of the greatest times you could have bought ever.
Well, that's a problem with these pundits on TV, right? You're on the other day, and this analyst is telling us, well, I nailed it in 2008, and I had this buy signal, and I've been long the market, but now I don't know what to do. I mean, it's like they always tell you what they did 20 years ago, 15 years ago, but there's no one on, except for us, that says, here's what you need to do now. Here's the opportunity now. It's always like, well, I'm constructive on the market, but I'm being cautious. Like, what does that do in terms of helping you to create wealth, right? You need investment advice. You need to know what to do now. Doesn't matter what happened yesterday. Doesn't matter what's going to happen next week. It matters what you're doing with your money right now.
All right, it's the hidden facts of finance, random financial facts that may surprise you or even shock you. All right, Bob, the LaSalle Network, funny enough, Bob, wasn't that the name of your alma mater? A nationwide staffing and recruiting firm found in a recent survey, 84% of companies it works with are planning to hire in 2023, marking roughly a 20% point climb from the share that was planning to hire a year ago. That doesn't sound like unemployment's going higher.
Well, it just goes to show you that we have a very diversified economy. Technology companies are laying off right now, but meanwhile, we still have 2 job openings for every person seeking a job. Biggest complaint I still get from just about every business owner that I do business with is, Bob, I can't find workers. I can't find qualified people to staff my business. My business would be growing dramatically if we could find the people.
Yeah. I don't think the Fed's going to be able to solve this labor problem because it's a supply issue, right? And we have a labor shortage in America. So it's one of the things we've been talking about a lot, but it's like every pundit is talking about how unemployment is definitely going up next year and, people are going to start losing their jobs. I don't think so.
Well, that's the thing. We know inflation wasn't caused by the wage inflation. I mean, Jay Powell, come on, give the worker a break. They're trying to catch up with the inflation you created, and now you're blaming it on them? My goodness.
Yeah, it's not pretty, Bob. It's not pretty. Chris, random length lumber for January delivery settled at $423.80 per 1,000 board feet on November 29th. That's down 63% for the year. Lumber futures hit a 2022 intraday high of $1,477 in March, the highest since May of 2021. Man, that's very, very disinflationary if you got lumber costs coming down and probably good for the housing market moving forward.
Yeah, chances are inflation's definitely coming down. But, my brother-in-law, Nathan, as you guys know, owns a cabinet-making business. And one of his biggest complaints last year was the price of lumber. Now it's starting to come down. He's really happy about it. But to your point earlier, he's having a hard time getting people. So, never a perfect scenario for anybody.
Yeah, exactly. Welcome to the world of business. You got all the stars to line up right, you're getting set up for something very bad to happen. It never works that way. Bob, we got to get one 70s rock stat in here. On this month in 1976, the Eagles released Hotel California on the way to selling 32 million copies worldwide, making it the 6th best-selling album of all time. Bob, are you an Eagles fan? And I mean the band, not the...
I'm a huge Eagle fan, both the Philadelphia Eagles, who are on their way to a Super Bowl championship this year, and the Eagles, the band, love that album, Hotel California. But, I'm glad you do these little spots on rock bands, right? Because, Christy McVie, who was one of the lead singers in Fleetwood Mac, passed away the other day, and we had a call with our team. And I'm sad to say that most of the people under 35 in our company didn't even know who Fleetwood Mac was. Made me very sad.
Yeah, it is sad. It is sad. I mean, some of the great out, and Fleetwood Mac was one of the best. And you're right. When people don't know who Fleetwood Mac is, it's like I feel like I'm getting old. It's not good.
Yeah, it isn't also your philosophy on investing very much like the Hotel California? You can check it in, but it can never leave.
Well, that's what I tell my clients. It's like they feel that way because, what are they going to do, Chris? They're just going to blow the money anyway. Meanwhile, I can double it and triple it, every 10 years. Leave it where it should be in the portfolio with me.
Sounds like Bob loves your money more than you do.
I thought that was the theme for an annuity. All right, that was just like some financial humor that maybe some of you will get. All right, guys, another great show. If you love our podcast, you like it, you're even mediocrely warm on our podcast, please Give us a 5-star rating on iTunes. Leave some comments there if you can. On Spotify, if you like it. Please, you can subscribe. And if this is on YouTube right now, you can click the like button for this episode. You can subscribe to our channel. Click the notification bell to be updated every week of our new content. Your enthusiasm, support, gives us the ability to continue to do this podcast. That's it for this week. Stay loose and keep an open mind.